In a refreshing change of pace for the crypto world, one miner is making headlines, not for cutting corners, but for doing things by the book. According to a recent article from Hackaday, a solo crypto miner has gained attention for building a completely transparent, legal, and environmentally conscious mining setup, a rare move in a space often criticized for shady practices and energy abuse. At the center of this story is a miner known online as Scott, who operates a modest but efficient mining rig at home. Instead of chasing huge profits or flooding the network with industrial power, Scott's approach is different. He's focused on efficiency, transparency, and sustainability, and he's documenting the entire journey for the world to see. So, what makes this setup stand out? First, the hardware. Scott's rig is powered by a Bitax, a compact, open-source ASIC miner that's designed for hobbyists. It's not the most powerful machine out there, but it's enough to contribute to the network while using minimal energy. The build is entirely custom, with carefully chosen parts to keep both costs and power usage low. Second, the power source. Scott's system runs on solar energy, reducing its environmental footprint significantly. In a time when crypto mining is being blamed for massive energy consumption, this is a strong counterexample, proving that mining doesn't have to come at the planet's expense. But what really sets this miner apart is the transparency. Every step of the setup, from the soldering of the board to the testing and hashing results, is documented and shared publicly. There's no hiding behind closed server rooms or anonymous wallets. It's a transparent operation, done entirely above board, and it's gaining praise from developers, hobbyists, and even industry veterans. This story is a great reminder that not all crypto mining has to be corporate or controversial. There's a growing community of home-based, ethical miners who care about the network, the environment, and the open-source ethos that crypto was built on. While Scott isn't making millions or flooding the network with hash power, his project represents something just as valuable: trust, integrity, and innovation at the grassroots level. And in a time when much of the crypto world is focused on institutional adoption and billion-dollar ETFs, it's good to see that the original DIY spirit of Bitcoin is still alive and well. We'll keep an eye on more inspiring builds like this one, right here on Cryptozard News Today. If you're diving into crypto this July, here are the top 10 cryptocurrencies you need to know, straight from the latest rankings by Forbes. First on the list is Bitcoin. No surprise there. Bitcoin remains the #1 cryptocurrency by market cap. It's seen as digital gold, and despite volatility, it's still the go-to choice for long-term investors. Right now, BTC is holding strong above the $100,000 mark. At number 2 is Ethereum. Often called the backbone of decentralized finance, Ethereum powers thousands of apps and NFTs. Its recent staking upgrades and institutional interest are helping it maintain dominance in the smart contract space. Third is Tether, also known as USDT. As a stablecoin, its value stays pegged to the US dollar. While it doesn't fluctuate like other coins, it plays a major role in trading and liquidity across exchanges. Next up is BNB, the native token of Binance. BNB is used for trading fee discounts and powering Binance Smart Chain. Despite regulatory pressure, BNB continues to hold a top 5 spot in the market. In 5th place is Solana. Known for its blazing fast transaction speeds and low fees, Solana is a favorite for Web3 developers and NFT projects. Its ecosystem has bounced back strongly after previous network issues. Coming in at number 6 is USDC, another major stablecoin. Unlike Tether, USDC is issued by Circle and has gained attention for its focus on transparency and regulation. It's widely used for payments and stable storage. At number 7 is XRP, the token behind Ripple. With the ongoing legal battle against the SEC finally cooling down, XRP is regaining momentum as a global payment solution, especially for cross-border transactions. Next is Dogecoin, sitting at number 8. What started as a meme is now a top coin, thanks in part to Elon Musk and strong community support. Doge remains unpredictable, but its influence is real. At number 9 is Cardano. Known for its academic roots and energy efficiency, Cardano has been slower to roll out features compared to Ethereum, but it still boasts a strong developer base and long-term vision. And finally, rounding out the top 10 is Avalanche. With its focus on scalability and low latency, Avalanche is gaining traction in both DeFi and enterprise blockchain solutions. So what does all this mean? These top 10 cryptocurrencies represent the current leaders in market value, adoption, and utility. Whether you're a trader, investor, or just curious, keeping an eye on this list helps you understand where the market is moving. Just remember, the rankings can change fast. Always do your own research and invest wisely. We'll continue to track the top crypto trends all month long, right here on Cryptozard News Today. Ethereum is making headlines again, and this time, it's all about accumulation and staking at an impressive scale. According to a new report from Crypto News, over 6 million ETH was accumulated in June alone, with 1 million ETH staked during the same month. That's a major vote of confidence in Ethereum's long-term value, and it's sending a strong message to the market. Let's break it down. The accumulation numbers show that large holders and institutions are continuing to scoop up Ethereum. Wallets holding between 10 and 10,000 ETH saw a sharp rise in balances throughout June, suggesting that whales are loading up in anticipation of a bigger move. This kind of accumulation often points to long-term strategies. It means these investors aren't looking for quick flips, they're betting on Ethereum's price rising much higher in the coming months. At the same time, staking is on the rise. Over 1 million ETH was staked in June, bringing the total staked supply to more than 32 million ETH. That's nearly 27% of the total circulating supply now locked into Ethereum's proof-of-stake network. Why does this matter? Staking reduces the amount of ETH in circulation, tightening supply. At the same time, it reflects growing trust in Ethereum's network security and long-term potential. The more ETH is staked, the more secure the blockchain becomes, and the more committed its users are to the ecosystem. Analysts say these metrics are bullish signals. When you combine rising accumulation with high staking activity, it typically indicates strong conviction from both retail and institutional players. That conviction often leads to upward price pressure, especially in times of low supply. And there's another factor to consider. Ethereum's burn mechanism, which removes ETH from circulation with every transaction, continues to reduce the overall supply even further. So between burning, staking, and long-term holding, the market is facing a significant ETH supply squeeze. If demand continues to climb, especially with DeFi, NFTs, and tokenization gaining traction, Ethereum could be positioned for a strong second half of 2025. We'll keep watching the charts and on-chain data to bring you the latest right here on Cryptozard News Today. Bitcoin could be on its way to $200,000, and some analysts say it may happen before the end of 2025. According to a recent report from Crypto News, market strategists and crypto experts are growing increasingly confident that BTC will not only break its previous all-time high, but could double its value in the next 6 months. So, what's driving this bold prediction? There are 3 major forces at play. First, we're seeing historic levels of institutional adoption. Spot Bitcoin ETFs have brought billions of dollars into the market from pension funds, asset managers, and private investors. These inflows are creating constant demand, pushing prices higher and drawing up supply. Second, Bitcoin's halving event earlier this year has significantly reduced the rate at which new BTC enters circulation. With only half the usual number of coins being mined and sold, the supply squeeze is real, and history shows that Bitcoin tends to rally in the months following a halving. Third, macroeconomic conditions are starting to lean in Bitcoin's favor. Inflation is cooling, interest rates are stabilizing, and fears of a global recession are easing. That combination is bringing risk-on behavior back into the markets, and Bitcoin is one of the main beneficiaries. But analysts say it's not just about numbers. It's also about sentiment. Retail traders are beginning to return. Social media activity around Bitcoin has increased dramatically since May. Search interest is climbing. Even traditional media outlets are starting to talk about BTC as a serious long-term investment again. If this momentum continues, analysts say $100,000 is not only possible, it's likely. Of course, there are still risks. Regulatory uncertainty, especially in the United States and Europe, could trigger short-term volatility. And a sudden shift in macroeconomic conditions could cool off the market temporarily. But the current trend is clear. Bitcoin is gaining strength, investor confidence is growing, and the foundation for a record-breaking rally is already being built. So, is 200K just hype, or the next logical step in Bitcoin's journey? We'll be following every move, every chart, and every signal right here on Cryptozard News today. Bitcoin is entering a critical phase, and the next few weeks could shape the direction of the crypto market for the rest of the year. According to a new report from Crypto News, Bitcoin is approaching a key long-term trend line near $120,000. Analysts say this level could define whether Q3 turns into a breakout or a major rejection. Let's break it down. So far in 2025, Bitcoin has shown solid resilience. After dipping below 100K in May, it bounced back and is now trading just above 107K. But what comes next could be the most important move of the year. Technical analysts are watching a trend line that goes all the way back to late 2021. This line has acted as resistance in previous rallies, and right now, it's sitting near that 120K mark again. If Bitcoin can break and hold above that level, it could kick off the next big leg of the bull run, pushing into new all-time highs. On the flip side, if it fails to break through, or worse, gets rejected and drops below 100K, we might be looking at a long stretch of sideways trading, or even a correction. This test is happening while macro conditions are starting to improve. Inflation is cooling, interest rate hikes are on pause, and institutional demand through spot Bitcoin ETFs is still strong. Retail traders are also making a comeback. Search interest is up, and exchange volumes are starting to climb. Still, not everyone is feeling bullish. There are concerns about low summer liquidity, and some fear a potential sell-off if Bitcoin hovers below 120K to long. Plus, any surprise geopolitical or regulatory event could rattle the market. But most experts agree minus 120K is the level to watch. A breakout could send BTC toward 14OK or even 16OK, a rejection. We could see prices slide back to the low 90s. One thing is clear, the market is holding its breath. We'll be watching this key level closely and bringing you updates as it all unfolds, right here on Cryptozard News today. XP is making waves again, and its latest surge is inspiring a surprising shift in the mining space. According to Crypto News, XRP's recent price rebound has triggered renewed interest in Apt Miners, a cloud-based mining platform that's gaining traction among retail crypto users. But what's the connection between XRP's comeback and a boom in cloud mining? Let's break it down. After a turbulent legal battle with the SEC, XRP has shown significant recovery in both price and sentiment. Investors who once backed off are now returning, and that renewed interest is having a ripple effect across the industry. One of the key areas seeing growth is cloud-based mining. Platforms like Apt Miners are capitalizing on the momentum by offering an alternative to traditional mining, one that doesn't require expensive hardware or deep technical knowledge. Apt Miners allows users to mine a variety of cryptocurrencies by renting hash power through the cloud. That means no setup, no maintenance, and no huge electricity bills. It's mining made easy, and it's catching the attention of new users eager to participate in the crypto ecosystem without heavy upfront costs. According to the platform, interest in their services has jumped significantly since XRP's market rebound began. Many users see cloud mining as a low-barrier entry point to crypto profits, especially as the broader market continues to climb. But why the connection to XRP? It's partly psychological. XRP's comeback is being viewed as a symbol of crypto resilience. If a project that faced years of regulatory scrutiny can bounce back, investors feel more confident about putting their money and energy into other parts of the crypto space. Cloud mining fits perfectly into that optimism. It offers a passive way to generate crypto income and feels accessible to everyday users. As more people re-enter the market, platforms like Apt Miners are likely to grow in popularity. Of course, as with any investment, caution is key. Cloud mining still carries risks, from fluctuating crypto prices to the reliability of the platform itself. Always do your research and understand what you're signing up for. Still, this trend highlights something bigger. When confidence returns to crypto, it doesn't just move coin prices. It spreads across platforms, services, and user behavior. XRP's comeback may just be the spark that's reigniting the next wave of mainstream crypto participation. We'll keep you updated on where the momentum flows next, right here on Cryptozard News Today.